A top chip analyst recently reported that the firm's business remains very strong. The valuation of Nvidia stock has dropped significantly, while a top chip analyst recently reported that the firm's business remains very strong. However, Nvidia continues to face major competitive threats. Nvidia stock continues to be a cautious buy in my book. Let's dive in. Nvidia's AI dominance. Here's why the chip giant has what it takes to weather the storm. Welcome to Timely Investment Research. In the wake of the recent large drop in Nvidia stock, positive comments about the company by a top analyst who specializes in the chip space, strong quarterly financial results by the firm's main supplier, and Chinese entities' purchase of Nvidia's chips, I become significantly more bullish on Nvidia stock. That's because I now believe that Nvidia's AI chips business is strong enough to thrive despite the increased competition that the firm is encountering. While the share's valuation provides a sufficient cushion against both this stepped-up competition and the likely future downturn of cryptocurrencies. As a result, I recommend that investors looking for exposure to a large, well-established firm at the heart of the AI revolution buy relatively small amounts of Nvidia stock. An improved valuation and upbeat comments by a top analyst. Nvidia stock declined 14% in the month that ended on April 21st, and the shares were nearly 18% off their all-time high as of pre-market trading on April 23rd. As a result, the name now has a forward price-earnings ratio of 33.11 times, with analysts, on average, expecting the firm's earnings per share to jump to $24.76 this year from $12.96 last year. The stock's PE ratio is fairly low, given the chipmaker's growth outlook. Meanwhile, Stacy Raskin, a well-respected chip analyst at investment bank Bernstein, recently said that Nvidia is still benefiting from good demand, while the firm does not appear to have experienced any order cancellations. Moreover, the sales of its recently increased products are growing, and its business is unlikely to experience a correction anytime soon, Raskin said. Powerful results by Nvidia's main supplier and Chinese purchases. Nvidia's main supplier, Taiwan Semi, reported strong first-quarter results earlier this month as its revenue climbed 13% year-over-year and its net income jumped 9% versus the same period a year earlier. And more importantly, TSM expects its sales to surge 20% to 25% for the full year. Unsurprisingly, TSM noted that insatiable AI-related demand for energy-efficient computing power had driven its strong financial results and impressive guidance. Since Nvidia is the leading supplier of AI chips, it should benefit from the insatiable demand that TSM described. On April 23rd, Reuters reported that Chinese research institutes had purchased Nvidia's top chips, despite restrictions that Washington had placed on the export of such chips. As a result, I believe that Nvidia's revenue from China will be higher than expected, increasing the likelihood that its first-quarter results will meet or exceed Wall Street's average estimates. Also noteworthy is that the biggest cloud providers in America are reportedly poised to spend very large amounts of money on Nvidia's chips. Nvidia is still facing major threats. As I noted in a previous video, Nvidia is facing major competitive threats from a multitude of companies, including the major cloud providers themselves, Qualcomm, Intel, and Advanced Micro Devices. And there have been signs that the inventories of a number of its customers are starting to build. Over time, I believe that these factors are likely to put significant downward pressure on the firm's average selling prices and margins. Meanwhile, with Congress looking likely to pass a bill that would force crypto sellers to follow bank secrecy laws, I expect Nvidia's crypto business to come under significant pressure in the not-too-distant future. The bottom line on Nvidia stock. Nvidia's business still appears strong despite the increased threats that it's facing, while its valuation has dropped a great deal and appears to be attractive. Given these points, I have become more bullish on the shares but continue to view them as a cautious buy. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.